All right, so welcome once again, guys. It's a great week. I would say markets are continuously going up. So let's get back to the discussion. Our goal will be to figure out what everybody's thinking in terms of the macro picture. We can talk about what is happening in general in the news. And as usual, we are recording right now. Just a quick reminder that if you don't want to disclose your name in the recording, this goes onto YouTube and so on. And so you just make sure that you can still ask questions in the chat as well. So let's get started on the chart. As I said, market is looking very interesting in the sense where we are today is almost like maybe a couple of percentage point away from all-time highs on SPX, which is kind of very much unexpected given the whole macro, which we were worried about in terms of trade wars, in terms of what is going on right now in the overall uncertain world. So let's get looking into those. I'm going to share the chart. Let me know if you can't see it. Hopefully everybody can. So as I said, so we have set up a line now on my chart. I'm watching very carefully how quickly we get to this all-time high mark. But overall, I think we have discussed multiple times, so I will not repeat that when we were talking about the worst case was behind us in April. That is coming true. We did talk about around this period in late April, we talked about the next big news, which also came around, which was the tax bill. Market got, in the meantime, market also got the same usual quarterly earnings, which confirmed that there is no major hit to anything. Tech stocks are still enjoying the AI boom. So I think we are back to here, which is, as we discussed, pretty much doing very solid bounce back towards all-time high. And Nasdaq is, as we don't have to look into different parts because Nasdaq is very similar. And I think main idea here is what is going to drive it from here. So the key things to which will drive here probably will be the news flow on a, like as we all know, the whole tax bill has hit a big hiccup as Elon Musk and many other people have started escalating the issues around it, which is of course the case where we are looking at big deficits and ultimately the whole Republican agenda of trying to reduce and extend the Trump cuts as well as the new perks which they ended up adding into the bill. So what does it mean? What it means is in short term, we might see, let's say if the bill is redefined or if the bill is again getting into in trouble that it may have to be scrapped or does not pass in short term, that creates uncertainty. Trade war is not over yet. And I think what we also started seeing in last few days, and especially today, we are seeing the yields are again bouncing back. So this is, I think, a place where we always keep looking at, right? Means we have talked about one of the parameters. Even though it's not threatening yet, we had already identified a few times that 4.6, 4.7% is where you start panicking. 4.5 is where you get concerned, and we are back to 4.5 now. So this is where we are right now on the yields. Now market is definitely a little worried. We did see that even though the hard numbers are coming great, the problem happening right now is around what is happening with the soft data, with uncertainty, with and there's no rate cuts in sight from Fed because that even though we are stock markets and S&P 500 are not worrying about the trade war worst case scenario, the uncertainty around final deals is still there. And by the way, we are very closely approaching that exemption period in early July when where the tariffs were only delayed, they were not removed from the table. And that's how Trump is negotiating right now. And we were hoping that there will be some trade deals announced by now, which is not happening either. What are the other factors? I think we have talked about Japan, which is kind of stable right now. The yen is not strengthening anymore, and the yields are not blowing up in Japan anymore, even though they are already in a bad situation. So remember that yen carry trade issue, which keeps coming, and I get a lot of questions how it looks like. If it goes in a more smoother manner where there's not a big capital flight, it never usually hurts. Yen can slowly, go and devalue, which is not going to happen anyway because their yields are rising. So I would say in general, there is no big risk here. But yeah, anytime it goes too fast, which has happened recently and even last year, July, August, I think that's something to watch out for. Um, Gold has consolidated a couple of times, and I think today we saw a correction. Overall, we have broken out, which we highlighted to our subscribers also last week, and it is definitely looking good. While it is not really gaining as much of speed as we expected after this breakout, so it's something to watch out whether this breakout sustains. But overall, again, if you zoom out on this, you will see that the gold is pretty much in a very long uptrend this cycle. So after breaking out from this consolidation pattern, what is a good sign, I would say, is silver. Now, SLV is the ETF which tracks the silver pricing. This is definitely a positive sign for precious metals, because till now silver was not participating in this rally, and what is happening in last few days, silver is accelerating now, which always is a good sign. It can mean two things. One is that people have identified gold is already has limited upside from here, and usually silver always run up fastest in the late rounds of gold rally. So this can mean two things: either the whole precious metals cycle will start going up more, or we will see the silver catching up somewhat, and that's what we are tracking now. But overall, I think generally this sector, precious metal sector, is pretty solid. Other things we can talk about it, but I think we have done enough discussion on WhatsApp and so on, so I will skip that. Around the news around Tesla, which happened, the whole spat between Elon Musk and Trump. So the less we say is better, because of the already it is taking most of the news space. I think we did talk about individual stocks like Nvidia and AMDs and of the world, Meta of the world. They're all going towards their previous highs, which looks like pretty much a sign of, people are getting more and more comfortable with the whole AI trade is back kind of narrative. So that is where I think market is currently watching very carefully. And ultimately, as we keep reminding everybody, um, the money supply. This is the total money supply, global money supply. If you see, it's only going up. It's making new highs almost every day. As I was looking at the Fidelity analysis, they were talking about how the money supply growth rate used to be 4 to 5%. Even before that, it used to be 1 to 2%. In the last few years, it is 8% globally. So how I always talk about is that if money supply is growing at 8%, as we always say, the resources in the world are fixed. So if you are not growing your capital by more than 8%, don't worry about like those inflation rates and so on. It will catch up with you ultimately. So if the world's money supply is growing at that pace, you have to always look at where you are in terms of your capital growth. So that's a summary. I would say, again, asset prices will keep going up as long as money supply keeps going up. There will be hiccups based on the news cycle, and we have to just, I think, watch out whether we are able to hit this all-time highs. We do have Bitcoin in our agenda for the rest of the thing. Maybe I will take a break and we can go dig deeper onto this of what people are thinking about. But technically, as we talked about last time, and we have been also informing our All Access subscriber of how we had broken out of the steep uptrend, which started in April. And we were expecting it to take support in these two areas, which is around 101K or so, right above 100K. And that is where it is currently taking support. And even if this breaks down, we have a very strong support in 200 moving average around 95K. But in general, I think Bitcoin, while it is correcting, the topic of the day today is that we are going to talk about how the Bitcoin treasuries and the whole thing is blowing up. So let's take this up after a few questions on the general market before we dig deeper into that. So feel free to add your questions and in the comments, or you can unmute yourself and ask the question on what you are thinking about the stock market, about any questions around other asset classes, which we already discussed.
Recently, there has been news regarding tokenization of the assets, right? What's your take on that? Would it help in a further growth in equities and in the digital
Yeah.
assets?
So I would say tokenization was the kind of a pipe dream at the in the last crypto cycle, and there were kind of, as you know, even the crypto world, there have been millions of tokens issued. And so that is in general the idea was that was the experiment which was conducted. Now I think we are seeing more and more institutional players are going behind it. To be frank, with the kind of Robinhoods of the world and the way brokerages are already giving you 24-hour trading almost, tokenization is not really a big benefit to equity because especially if you're talking about public equity like Apple, Nvidia, Google kind of shares, tokenization is not going to add much beyond what already exists because there is no real change for the end user. Ultimately, these are trusted things. These are things which are issued by centralized authorities. This is regulated by SEC, regulated by your regular financial institutions. So tokenization, bringing it on blockchain or something like that will not make a big difference in your equity market. What I think people have been talking about is tokenization can enable the most of the features of tokenization are like fractionalization, 24-hour trading. All those things are probably already implemented in a centralized manner. So I don't think that will be a huge difference. What I'm learning about it is that the main difference which will come from is these tools are not available outside US. So the foreign investors or the countries which do not easily allow you to participate in US equity, they may find it easier on a blockchain-based platform to trade US equity. And as we have multiple times talked about what happens in this world right now, like everybody, because we are in an information age, everybody is looking at Nvidia, everybody is looking at Apple, everybody is talking about Tesla. When Musk and Trump fight on Twitter, you will see comments on Twitter from Africa, from India, from Korea, from every country, because unfortunately or fortunately in this information age, everything becomes globalized very fast. So imagine now the countries which don't have good exchange systems, like even take an example of India, which did not allow fractional shares. I just read that NSDL, which is the Indian kind of demat agency which allows the digitization of the stocks, they first time started fractionalized shares, which is the first time where, because $100 stock is too high for a country like India to invest in a single stock. So they will be able to invest in fractional shares. So I would again summarize this, that other non-tokenized assets are already being, they are deploying fractionalized assets and so on. So it's not a big deal, but yes, it may open up new capital inflows from outside US into the equity. So definitely a good thing overall for this, for the equities in terms of inflows. I will take a question quickly on the comment. There is a question around uranium as an ETF. So I think, yes, we are bullish on nuclear energy. So as an ETF, again, I've not looked into specific ETFs if you're talking about. So you can definitely go through the details. Means I would not comment here on a public call about the pros and cons of that. Means and as a disclaimer, we never wanted to give you a specific investment advice here. But if you think about the whole AI boom, I think the narrative is very clear that there is no other energy source which can give you growth which is needed to maintain the AI boom. And then also, I think nuclear is pretty much the safest source of energy for forever if you compare with any other source in terms of how it has been. I know that the narrative has been different for 2 decades because of whatever ESG concerns were. But if you see now, just as the need arise, they have almost removed all those concerns from nuclear, and almost every country is going back to nuclear, and especially US. So yes, it definitely looks like a good sign. And if you are part of our All Access, we recently issued one of investment item in uranium, which has done very well already this year. So we can definitely discuss, if you are part of the subscription, we can discuss the specific investment advice under that framework. All right. So, but yeah, I think overall, definitely a sector to look at, because if you look at what is the AI boom right now, last 3 years, if you take out anything which has grown, there is some correlation with the AI trade. Either there are hardware companies, software companies, or it can be a trickle down effect. And as we said, energy sector will have similar trickle down effect in if the nuclear growth is back, which as of now it looks like that's the case. All right, so if no other questions right now, so let me do one thing. I will go into the Bitcoin treasury, which was the topic of the day. So let me quickly share what is really happening in this space. And what I would also like to highlight means is to start looking at what is happening beyond the micro strategies of the world. Or I think some of these things are in the headline for you, but some of the things, if you're not watching closely, you may miss out. So I'm going to cover some of these things. Let me quickly open some of these things in my feed, and then I can go and talk about it by sharing screen. And as I said, in the meantime, you feel free to add your questions as well. So this is a website which is a very good tracker of Bitcoin treasuries. So if you see here, means most of these right now already around. Now, if you take out some of these, let me remove some of these governments and DeFi and ETFs, which I think ETFs are you already well aware of, that ETFs are very fast growing. The ownership through, I think, BlackRock or Fidelity of the world. Now, even if you look at just the public and private companies, which we call it the corporate treasuries, look at the growth even from an April timeframe to now. It is going at a very fast pace. And this is like, it is a consistent upslope, which is happening if you go back. And this has gone very fast since November, when MicroStrategy really took a big leap. And they started this 21 billion and plus 21 billion plan, which has now already been exhausted, and they have issued another 21 billion. Now, what is happening beyond this is, so this is the list of all the companies which are holding. And if you can see XXI, this is the biggest new addition. And who is the backers of this? This is the XXI is basically Cantor Fitzgerald, which is our Commerce Secretary, Lutnick's company. And they have converted into this stock called XXI using the reverse merger or whatever you can SPAC, which used to be called. And they are already taking money from SoftBanks of the world and so on. So it's a pretty big initiative, and their goal is to actually go and match MicroStrategy. Then there are, what is not visible here is the new set of companies which are started. Even in last 1 week, this thing is snowballing. So this is a great summary somebody wrote, so I just stole it from Twitter. So basically, this is I've been tracking almost every news around it. There have been 16 new treasury companies in last 1 week alone, where they have already started buying, or they have just announced their plans to buy Bitcoin. And in general, within this 1 week, 4,456 Bitcoin have been bought, which includes MicroStrategy, which includes MetaPlanet, which is a very big initiative now from a Japanese company. It's called MetaPlanet, which is buying in thousands now every week. We have 11 companies which have announced billions of dollars worth of purchases coming. And like there are, like, it's not just limited to US. You will see, like, there's a Korean company, there is a Canadian company, which is, all these are joining this bandwagon. And if you look at some of these actual some of the mining companies like Marathon, like they are also buying more than mining. Earlier, the Bitcoin supply, so when we used to have this whole halving cycle, I'm sure some of you who have studied Bitcoin, why did it matter? So my take here is that halving cycle doesn't matter anymore. We are in a consistent bull run. The 4-year cycle no longer exists in our world now. The reason being, halving used to matter. Yeah, because the price used to catch up, and then we used to worry about the supply being added. Now you are looking at some of these big mining companies who are not only not selling what they're mining, but they're actually buying using debt, just like MicroStrategy. So you are seeing here a list of CleanSpark is another company, like, Marathon Digital. All these are mining companies. They are not selling anymore, right platform. These are all companies which have stopped selling because they realize that the value of the company, and just like MicroStrategy is selling stock while they're holding this Bitcoin, they are realizing that they can just hold these in their treasuries. So that is going to have a huge impact on how this the whole reducing supply narrative even becomes doubly effective, and we don't care about halving anymore, because now even the miners are not going to sell. So this is where I think the big change is happening. This is where we believe we may have a continuous bull run in Bitcoin, and the impact of this whole 4-year cycle, where we used to wait for the correction after every 4 years. In a way, we already had a correction this year. We went from 108K to 78K, which was not bad. Like, I would say, if you correlate now, because Bitcoin is becoming more like a Wall Street asset, we call it. And this is one theory I was putting together is if the size of Bitcoin allocation with MicroStrategies of the world and what this XXI, which is the 21 company, is doing, they are trying to put together million Bitcoin each out of the total 21 million supply. So in a future world, how I foresee is that these people will have sufficient capital or debt market availability using their existing asset class, that they will always have ability to raise money, and they will almost act like central banks of the world for the Bitcoin world, where they will be, if you are selling or if somebody decides to dump Bitcoin for some other any reason, they will go and purchase it. So the second part is now the whole, as we discussed, the supply side is already disappearing because miners are not selling, and mostly it is like typical retail investor or somebody who needs money or who just is trading, is selling. And with the limited supply narrative, with there is always a buyer around, why should we have 50-80% kind of drops? So what we saw in 25% drop in recent time probably will become the norm. And now it also gives you another idea of that it is becoming more like a asset class like gold or S&P 500. So this is, I think, a fundamental change in the Bitcoin layer, which did not exist in last few cycles, in last 4-year cycles. And as the mining difficulty gets adjusted, as you know, the halving works, this effect of even those miners who have to pay, some of them who are selling will go away. So now we have a compounding effect of this whole game theory where every day new companies are getting added who are buying into their treasury and no sellers. This is where the theory of multi-year bull market without any major correction more than 20-25% is now taking shape in Bitcoin world. So this is the impact of what is really changing. And we have not even talked about the next step, which is not yet materialized, which everybody was hoping for under the Trump administration, is the whole sovereign collection of Bitcoin, where already there are a few states who have approved it, who have already in US. We know that many, like even one of the Russian banks has issued a Bitcoin-backed bond. So you will see a lot more announcements in next few years where banks are releasing the guidelines. If you see what is happening right now, a lot of banks have made it easy for you to create products on top of Bitcoin, where you are able to, now JP Morgan is allowing you to hold custody of Bitcoin as your collateral for taking loans. Some of these things did not exist previously. So that's where I think the whole institutionalization, or we can call it as a Wall Street adopting this and leading it now, is creating that base for Bitcoin. So this is what I think is the impact of this corporate treasury. So this is one of the topic I wanted to cover because a lot of questions were coming around. Why, like this takes care of multiple questions which I keep hearing every day. One question is based on the history of Bitcoin. We are in the 4th year of bull market. Is it a bad time to enter? The second question is, what is really changing, in Bitcoin world, why people are still bullish after 100K? All these things I'm trying to explain through what is really happening in the background. So that's the story on what really is going around in Bitcoin world. So any questions, feel free to ask, and we can discuss further. All right. So if no other questions, I think,
I
yeah,
have
go
a
ahead.
quick question for you. For people who, let's say, even who have a lower cost basis on, like, bought Bitcoin BTC spot on Coinbase.com, let's say pre-2017, what's the best way to hedge or like downside protection for that? Because you can't use IBIT, right? So what's the best way to hedge?
Yeah, so I think the IBIT is ETF, which is 100% correlated. So hedging you can do simply by buying puts or something, like, out of the money puts. That can be a very crude way of hedging what you have. But now in future, I think what you will start seeing is there are already companies who are creating a product. So if you see some of these Bitcoin treasury companies, what they are doing is, if you are an accredited investor, they're allowing you to contribute your Bitcoin, and they give you equity into these companies, which will be getting listed. So by the way, XXI is one of that, and there are a couple of other which there's something called Nakamoto Corporation, which is doing this same model. So I think they're still in early days of what is happening here in terms of where you will be able to contribute your Bitcoin into a Bitcoin treasury company, which will allow you to come into as an equity partner. In other words, you will just basically get shares of the company in exchange for contributing your Bitcoin. There is a IRS law, which I have been told, again, I'm not your tax advisor, so I cannot confirm this, but what I've been told is that why this model is working for those corporate treasuries is that there is an IRS law that there is a kind for, like you are basically contributing an asset for getting an equity partnership, which is allowed under IRS, that is not considered as selling, and you get like for like asset in that. So that's the only thing I can think of, but that is of course much bigger step to take. But if you have Bitcoin in Coinbase or something, I would say remember that IBIT is 100% correlated. That is a pure form of ETF, which will always give you exact. Of course, there's a 0.525% of fee, which is not a huge impact in Bitcoin world, the way it is growing at almost 50%
But the problem with
annualized.
IBIT is that it's on two different the BTC is held as the asset on Coinbase.com, but the IBIT is held at a broker's account, so they're not on the same venue or the same
Definitely.
platform.
So as I said, it's not going to be a pure form hedge in the sense that you can't sell calls against Bitcoin. I completely understand that. And that is the reason being, I think US does not allow some of these things. If you're outside US, Coinbase has just acquired the Deribit platform, which is basically going to get integrated into Coinbase, is my understanding, which allows Bitcoin options to be bought on the same platform. So you can maybe wait for it if that comes to US at some point. But there are other exchanges where you can migrate your Bitcoin, like Deribit and so on, where you can do options in the same platform.
Okay. So what do you see as the biggest risks to Bitcoin going to 1 million in like 10 years?
If it is going to 1 million, I'm assuming you're saying the risk of not going
Of
to 1 million.
not going to 1 million, yeah.
Yes. I would say what people don't understand. Okay, so what is the risk? By the way, whoever has raised the hand, I think you can just unmute yourself and as a follow-up question. So what is the risk? Okay, so risk is very simple. What you don't understand is, just like you said, there are people sitting at a lower cost basis. There are people sitting with, who have not touched their Bitcoin when they bought it at $100. The impact of the supply coming in, you cannot just extrapolate when the asset class is of a certain size where it can go to, like, every 10% move up now can bring in a lot of selling at every level. So yes, in long run, there is no reason. But of course, you never know what are the systematic risks, right? Means people talk about the whole quantum angle, which I don't think is something big to worry about. People talk about, in general, one of these Bitcoin treasury companies being irresponsible, blowing up, creating a systematic risk, because these are new things. You are basically creating layers and layers of capital on top of a new asset class, which has not been tested. So going to 1 million takes a lot of, I would say, a lot of holding by people who have bought right now at 670, 80. Means, can you imagine them not selling when they double or triple from here? So what I'm trying to highlight here is almost all of the capital will be available for selling, which even if it 2x from here. So going to 1 million it may happen, yes, if the money supply keeps growing at the way it is growing, and if the whole all risk asset class keep going up. If S&P 500 is at 12,000, there's a very high chance that Bitcoin can be 10x if S&P 500 is going double from here. So that will be probably more of a matter of dollar devaluing, and not necessarily purely based on the fundamentals of Bitcoin. So let me put it this way. Yes, it was much easier when you did not have these kind of big entities buying. At that point, the corrections were bigger and the adoption was less. Today, almost everybody who can buy Bitcoin has bought. So now it's more like a product which is much like Wall Street product. But on the other hand, the best thing to compare to this will be gold. Like if you see today, almost every day, somebody like China is buying, or all the sovereign nations are buying, people are buying. They're speculating and they're investing in gold as an asset class. Even then, we are getting from 2,000 to 3,300. Like we are struggling to double from here. So the question here is, how would you justify going 10x from here? While I definitely believe that it will keep going up, but it will probably act more like gold and in near future, and rather than expecting 10x and 10x, which I think some people are trying to project, which is not easy as the size of the asset class increases, because now it's very relatable to the total money in the world. Now it's already in trillions. You cannot really 10x from here and grab such a huge portion unless the debt, unless the overall risk asset and everything is blowing up. If the total money is growing, if the risk assets are becoming double, triple from here, that means dollar is devaluing. Then that's the only case I see why Bitcoin is becoming 1 million. Otherwise, if you just see the percentage of all asset classes, it cannot grow without the pie increasing itself.
Like right
to
now
that
it's
level.
around 9% of gold. So do you see it potentially taking market share from gold on a net basis or on a relative basis, like over the next 10 years? To what extent do you see that?
Oh, sure. I think gold is a no-brainer. It can maybe in 10 years, maybe in 20 years, maybe in 50 years. I don't know when, but I think it's very well proven that the way the narrative is taking shape, that a lot of people are migrating because of it has all the properties of gold, and it is better than gold in many aspects. So that's how people are quantifying it right now. So catching up with gold is no-brainer. It can happen in two different ways. One is that gold corrects and people start dumping gold in favor of Bitcoin, or other can be that gold grows much slower than Bitcoin. So that is pretty much easy. What I was referring to is even that does not take it to 1 million each. And I would say it's going to be probably yes, it is because it has to be somewhere. Gold has to start losing value if that is happening at a scale.
What is the accurate measure for gold market cap? The link I sent you says 22 trillion, but there's a lot of error. There's a big margin of error.
I think the biggest issue with gold is mm, there are different estimates of how much gold exists. Nobody has trustworthy data. This is exactly why gold is losing on the narrative versus Bitcoin, because you cannot validate. Like Bitcoin, even though you may not know whose wallet it is, you know exactly how much total Bitcoin is on blockchain. In gold, you never know, because there's a theory that China has a lot more gold what they have declared, because China has a huge land where they have found a lot of gold in last 20 years. They have been exploring nonstop. Then there is another theory that whether US really has gold in their vaults. Then there is another theory that there are asteroids, or many other places where you can mine infinite gold, and it's a matter of at some point it becomes worthy of mining those. So there are a lot of ways where I think gold will always have problems in a world of technology where the things are moving so fast. We have seen this with oil, how we used to think about peak oil. Now we are talking about peak demand, because oil is infinite now with the fracking, with shale oil, with how much oil has been found recently in last 10, 15 years. Nobody cares about whether we will run out of oil. It's more about we will run out of demand because we are moving away from oil. So technology always overtakes. So what we are learning is that resources which were supposed to be rare are not rare anymore. And it's just a matter of having better tools and technology to find it. So I would rather not even care about what is listed. I would ask you a general question about gold is in 50 years from now, when we're talking about robotics, when we're talking about like the whole technology is growing so fast with AI. AI is just one example, right? Means I gave you example of shale oil. Means there's so much new ways of exploration, new ways of mining, which are going to be introduced if gold continue climbing up, that there's a limit to how much higher up gold can go, because the supply will never be limited, because it's a resource which has just not been found. Even like companies like there are many companies I can tell you. Let me not name the companies here because I don't want to make it an advice here. But basic idea here is you will have so many listed companies in stock market who have proven reserves which they have not even got funding to draw it out of the ground. That is like kind of scary to think of, that there has been proven and found reserves which are people don't see viable, because they think that if you draw it out, the price of the gold will go down. That's the amount of gold they have found. So I think that's where
So then is the
gold.
correct in 2021, Peter Thiel gave a presentation at a conference. He said instead of looking at gold, we should be looking at global equities, like to compare to benchmark Bitcoin, like Bitcoin is X% of gold, Bitcoin is X% of global equities, or X% of
Mhm.
global wealth. So this link that I sent you, it's saying that UBS is saying there's 454 trillion in global wealth. Now, that number is very high, but if we, whatever the number is for the denominator, what if we look at Bitcoin as a percentage of global wealth? Then would 10 trillion market cap would seem low, right? Do you see the link I
I'm with
sent
you on
you?
that. So yeah, so that's true. So let me share it with people who are, what you're talking about. So this is a good chart, and I like how you are thinking. And to be frank, that's a thesis of people who are talking about it going to 1 million. But as I said, right, means it's about a matter of where's the new money supply going to come from. Today, most of the price is being held back when we should have ideally corrected in the fourth year of bull market. We have already corrected 25% and started going up again because we have a new source of capital, which is the micro strategy of the world, which what they are doing is they're actually tapping this market already. What you're not realizing is in this chart, most like what is micro strategy? They are basically taking debt market and they are buying Bitcoin. They have created an equity MSTR out of it. So all the $50 billion worth of market cap of MicroStrategy is actually represented here as a different asset class, not Bitcoin, but that's actually Bitcoin. So what you're seeing here is more and more Wall Street products are getting created, which will capture this and start getting parked in Bitcoin. Now that Bitcoin will be staying in the treasury of a corporate, but it will be marked as this particular set of asset class. Like MicroStrategy today is a debt or equity asset class in this pyramid. So this is where I think the lines will get thin. You will not know whether Bitcoin market cap includes this or doesn't include this.
So actually,
this is
a
what,
better one I sent is the second link I sent is from Michael Saylor. It's from his presentation in if you open that link and then you just scroll down to there's two graphics. The Michael Saylor, like the block trainer link. It's the third link, yeah. So that link is actually a much better graphic because I think he inflated the value of the global asset value, but the exact number almost matters less. Like we can estimate. This is what you're saying, right? I mean, you're
yeah.
saying right
So
now
I
Bitcoin is on the
completely agree.
left.
So I think,
Yeah.
yes. So what I'm trying to say is that all these have a merit, all these things, how fast. So what Saylor is trying to do is he's trying to bring all these, the bigger bonds asset class, which is basically 300 trillion. He's already brought, like if you see what he has done is convertible bonds. There are three kind of convertible equity, which is kind of considered a bond kind of a product. Uh, Even I don't know whether they're counted in equities or bonds, but they are basically somewhere here. And then he has a whole debt market which is dealing with where he actually has convertible bonds, which are definitely under bonds. So then there is this preferred shares and there is a bonds. So he's basically bringing this total 400 trillion money into Bitcoin. Now, in terms of asset class, they will still be counted here because they are actually a corporate company's bonds or preferred equity. On the other hand, Bitcoin had already absorbed that capital. So you cannot, these lines are becoming so overlapped, the thing is getting so confusing that you don't know whether this is a fair explanation after another round of, let's say it goes to double or triple, while it has already started absorbing. Basically, all these bonds and equity are already exposed to what we call it. Again, let's think about, which I always keep talking about. There's something called M2 money, M3 money, M4 money. Bitcoin is entering a asset class right now. Bitcoin supply is a M1 money of Bitcoin world. Then we have M2 money, which is all these ETFs and this MicroStrategy of the world. What MicroStrategy has created is a M3 money. So you cannot go back even today when we talk about 85 trillion of M2 money. The actual money supply is much lower. Means I don't have the number in front of me, but it's way lower. So 21. So Bitcoin cannot consume all of it. Bitcoin derivatives like these ETFs, like the corporate treasuries. So Michael Saylor is definitely misrepresenting because he's basically trying to translate that whatever products he's creating, that is not going to be the way people will invest. While he's promoting his own products, when somebody is buying Bitcoin, they have already allocated that MicroStrategy holding that M1 money. He's already leveraging it up. He's already creating billions and billions of dollars of extra capital on top of it. So that is what is also represented by Bitcoin, which is not counted today in Bitcoin market cap. So it's a very complicated discussion. Maybe I hope you're understanding. So again, you go back to M1, M2, M3 money supply. In my view, what is happening with these new products, Bitcoin, 21 million Bitcoin will probably become way more when you look at these derivative products. And this is the downside of something like MicroStrategy, because a lot of people will get exposure to the same Bitcoin which is holding at a much higher multiples. And that part is already backed by Bitcoin. So you're not going to actually translate that whole capital into Bitcoin in terms of market cap. Does it make sense?
Yes. Yes, it makes sense. The price may still, the price per coin may still appreciate, but the classification of whether it's in the bonds bucket, the debt bucket, or the crypto bucket, that is a separate question, right? Is that what you're
That's
saying?
right.
Yeah.
That's right. So basically what I'm trying to highlight is the price of the Bitcoin per coin, which is the actual Bitcoin pricing, need not go up when the more money is getting allocated into Bitcoin. Because MicroStrategy going up by 4x is absorbing way more.
And that's going to create cycles of significant volatility when there's over leveraging and there's right, that'll create more opportunities for a transfer of the Bitcoins, and right, that's happened historically, right? So
that's true. So and every cycle of volatility, as some people did share their own personal views, that when markets start correcting, some people will not be able to take that correction. They panic at the wrong time, they sell it. This is a trading market. This is any liquid market goes through these cycles. Even that happens in stocks also. Not everybody who bought Nvidia at $5 is still holding that. So they may have sold it and bought back at a much higher price. So that is common. So I think we are going into those kind of discussions now. So basically, originally, let me take other people question, because some people had raised their hand. They can unmute themselves now. But let me just conclude by saying, sometimes we oversimplify because they have their own agenda. Michael Saylor has his own agenda to justify that Bitcoin is going to million, because he can justify that his stock is a leverage product and that will go up 100x if Bitcoin is going at 10x. So they will always, because he is the whole business of his is defined on Bitcoin, he may have his own motive. So always think about outside that, right? Means we cannot just keep listening to these people when we are trying to make our own estimates of where it is going. So please go ahead for the next question.
So I had raised my hand earlier. This is similar to one of the questions that was asked earlier about, so what is the risk for Bitcoin? Now, I heard you say that the actual price of the coin may not go up because it's going to get classified into other asset classes. So in that case, then what is a smart investing strategy right now? Potentially, it's not investing purely in Bitcoin because it may or may not go.
Sure. So let me put it this way. So maybe I got misunderstood. When I was trying to say price may not go up, what I meant is that if 10x more capital gets allocated to Bitcoin, Bitcoin price will not go up by 10x. But that doesn't mean that Bitcoin price will not go up 3x. The macro is there. That's what we were talking about, that the continuous money flow, all these M2, M3 money supply, which is coming in, that is going to get absorbed into these coins when there is a race. And that's what we started with, right? There's a race right now. Every day, new companies getting formed to buy Bitcoin in their treasury. So Bitcoin price will definitely go up as a demand supply. What I meant to say is that if another $1 trillion is getting allocated into Bitcoin, the impact of market cap of base coin, which is Bitcoin, may not be increase of 1 trillion. That may be 200 billion or 400 billion, while 1 trillion is increased in the Bitcoin ecosystem. So, and that's what I started with, that once you get to a bigger and bigger M1, M2 becomes even more bloated. So the people who are building on top of it, they are actually going to be bigger. So to answer your question, the speed of increase may not match the last 4 or 5 years. It will keep slowing down. But because this ecosystem is growing so fast, it will still be pointing up. So let me first clarify that my view is that Bitcoin in medium to long run will always be up. That is a basic fundamental, because it's because the fiat supply keeps increasing while Bitcoin does not, right? It's fixed at 21 million. So by definition, it will only go up in medium to long term. So the second part is, as you go into other asset classes, they are more risky because they are more leveraged. So now, should you invest in those? Like, should you invest in MicroStrategy? It's all about your ability to take risks, because the drawdowns in MicroStrategy will be bigger than what is going to be there in Bitcoin. So there's no easy answer. So it's a matter of whether you want the base product, whether you want a leveraged product. And this is where I think at Proflex, what we do is, and how we recommend is, always use hedges, because volatility is given. Either you can accept the volatility and just hold it for long term and forget the short term drawdowns, or you can use smart option strategies or hedging to benefit from volatility. So to answer your question, I would say this is individual decisions. Like, if some people like to just buy and hold for long time, it helps you in terms of how you handle your taxes and so on. Some people like to trade around it, selling it high, buying it low. What we are suggesting is there are other approaches, like, which we believe in, is hedging using options, where you also benefit from downside as well as upside, and you can generate higher returns. That's what we have done over and over again for years. So I would not say that there is one way. It's a matter of what you like in terms of what suits your approach. But overall, I would say it will be volatile. It will probably trend upwards, just like any other risk asset classes. But remember that if Bitcoin is going up, it also means that the money supply is growing. That also means that all assets are going up. So the thesis remains same, as I always say, that stock will go up, Bitcoin will go up, everything will go up, because the global money supply is growing at 8%.
Sounds good. Thank you.
I think this was a good discussion. To be frank, we started with the basic idea of what is really driving this Bitcoin boom, why we are not seeing bigger corrections, because of the whole corporate treasury wars happening. And ultimately, I think we led into the analysis of what people are projecting as the final price or growing price in 10 years or 5 years or 3 years. I would say just be careful of those narratives. Means there are people like who are talking about $1 million, $3 million, $13 million. What they're not realizing is that at a $1 million price, it's not Bitcoin rising. It's basically the whole dollar has gone down the drain. That's not good for anybody. To be frank, I would be very scared of the moment when Bitcoin goes to 1 million. If it happens in 30, 40 years, that's fine. Or even if it happens in 10 to 20 years, it will be fine, because that's the growth of, as I said, 8% per year is the global money supply. So if Bitcoin is growing at 15 to 20% per year, at a double the rate, that would be a healthy rate. Maybe 30% is also a healthy rate. But beyond that, if it's growing at 50 to 60% at this price level, at this size of the asset, it means that something really bad is happening in the finance world. So that's one thing to always worry about. All right, so any other questions on non-Bitcoin side or anything else? We can take a last one or two, or we can take a follow-up question on this topic as well. All right, so let me quickly check the chat. I don't see any specific question there either. So no, I think good discussion, guys. So let's keep continuing our, in our macro group. And just a quick note, we had pretty good discussion around options workshop. I would definitely recommend people to start looking into that. Means if you're part of our Access subscription, you're already getting option trade alert, and we are trying to educate in a very simple way. We're using actual trades, but I think most of the questions always boil down to what if this does not materialize. And what we have tried to do is use options to remove that what ifs, remove those scenarios, because what options give you. And I would definitely be a big believer in everybody should learn options, because that gives you a tool to manage when things are not working your way. And once you have those tools, we call it you can invest with more confidence, where you are not hoping, because most of the other tools without options is you buy a asset class and you're just hoping that it goes up after you bought, and you panic when it goes down. When you have options or hedges around it, you are actually happy in both sides, because one of the things is working. Either your stock is working or your hedge is working. And that way you can make better plans and you don't panic. And 80% of investment, I would say, is all around models of, where you don't panic, because in long run, nobody has ever lost money. We always talk about, when we talk about macro, you can look at any asset class, whether it's gold or whether it's the stocks, even before Bitcoin came around. If you had just bought and never touched it, you would have never lost money. And again, if you don't invest in individual stocks, if you're not doing deep research, because the only way to lose money is that market is going up and you invested in the wrong company. So that is one thing we always talk about. So it feels very smart to pick stocks, but if you are not active investor or active researcher, it never helps. And unfortunately, that's also why this whole belief is that nobody can beat the market has been made, as we have done it over and over again. And let me tell you one thing, if you do with the right research, with the right hedges, and with a plan, it's not very difficult either to invest. It's about whether you have the aptitude to go and spend time on it. That's what we are here for at Proflex. I think that's what we try to keep trying to create this discussion so that everybody can make their own decisions. So thank you for joining on a Friday evening, and let's talk again. Have a great weekend. Bye-bye.